Here is what I look for when I'm investing in a mining exploration from a flow through side. Um, I think yes, we want a strong number one. Yes, we want strong geology or potential of a resource, but more importantly, we want to make sure there is a strong management team. Yes, we want a strong geology team, but we also want capital market knowledge or know-how. And the reason why capital market know-how is really important when you're investing in flow through or basically exploration companies is because these companies make no money. When they make no money is because they have no revenue, and because they're just out there doing field work or exploration. So if you don't have the knowledge of capital markets in going back to market, doing client relation, providing press releasing, being transparent, being high communication skills, these companies, if you don't have that, these companies could lead to be orphaned. The companies with the least amount of success that I've seen over and over are the companies that basically have very low capital markets and basically hunker down when the commodity is down and when their stock is down, and they hunker down, no press release, no news. And what happened is that they become orphaned, and next thing you know, that the project gets sold basically pennies on the dollar. The most successful exploration companies year over year I've seen is companies, no matter where the stock price, where the commodity is, they continue with their program. Yes, they may not do 5,000 meters, they may only do 1,500 meters. But what's important is that they keep basically providing or de-risking assets, or at least giving us information on their drilling program where it keeps the investor engaged, and basically you have no investor fatigue. The moment you have investor fatigue, these companies get orphaned and forgotten. After that, so what's really important also is when you're investing in a flow through as a flow through investor, most important is to look at the balance sheet, not the income statement. The income statement has very little, it's not very important in this case. The reason why is because they make no revenue. But what's important on the balance sheet, you want to make sure there's enough hard dollar to cover at least 6 to 12 months as G&A. The reason why is that you don't want your flow through capital to come in and get commingled with the hard dollar that is used for SG&A. Again, that would create a lot of issues for the limited partnership, but also for the limited partnership unit holders and also the advisors. So we want to make sure this is just to cover there's enough hard dollar on the balance sheet. Environmental, more infrastructure. Yes, for sure, we want these projects close to infrastructure. Not a deal breaker if they're not, but we definitely prefer when they're closer to road, closer to airport, closer to electricity, closer to water. The reason why they're very remote, what happens is that your cost per meter increases significantly, not because it costs more to drill, it's just because it's hard, it's much more costly logistically, meaning that you're spending a lot of money basically by helicopter. So what happens in this case is that, for every dollar that you put in for flow through, half of it's being spent on helicopter expenses, which means less results. And again, we're in the business of getting results, getting press releases. And if we can have 70 or 80 cents of every dollar being spent for drilling or mining result, we definitely prefer to do so. So when we're sitting down with the team, the technical team, and the management, we want to make sure that we understand their exploration program. If it's field work, fine, but we want to understand what kind of field work you're doing. Are you doing laboratory? Are you doing magnetic? Any of that kind of work, and when can we expect results? Again, for us, because we're a short duration flow through, we want to make sure there is continuity of news, and to make sure that the investors are kept alert of what's going on and if there's going to be success on the exploration side. This is also true from when they do drilling activity. What kind of drilling activity are you doing? Are you doing infill? Are you doing step out? Are you going deeper? Are you expanding the mineralization? Are you de-risking it? For us, it doesn't really matter. But what's really important for us is when can we expect some news from this drilling activity? Again, we want to make sure that we have continuity of information like that. We can say, okay, there is a real mineralization zone here, and continue to invest with that company. Exit strategy. I think this is one important as a flow-through investors, because we're short duration. We want to make sure that these companies we want to look at the cap table. We want to make sure how many shares out there, if there's any debt. We want to make sure how liquid. We want to see if we can, be able to sell our position if we had to without having a large impact on the market. So all of these we take into consideration when we're looking at our exit strategy. For sure, the best exit strategy would be for a large mining company to just acquire the exploration company.